Whoa. The S&P just closed at another record high. The bulls are in full control, and I think we're clear for liftoff. Elon, do you like rockets? Yeah, I like rockets. I like them big. I like them really big. I like them super heavy. I like them deluxe. Cool. Because right now, the rocket ship is taking us from out of fear into neutral. And that's a very good sign because now that we have higher highs, it might be like last time. We might even go all the way back into extreme greed. How could that happen? But first, how can we make 12,333%? Just bet on Elon. That's what Google did. How SpaceX IPO could deliver Google one of the most lucrative startup wins ever. Whoa. $1.5 trillion. Who is this guy? Well, he's a little bit of a secret genius. Yes, and so was Google. In 2015, they invested $900 million in SpaceX for a stake for around 7%. And now that's worth $111 billion. Holy F. Can I get one of those, please? Yeah, that's what I thought. I'm like, I would love to get that. So we go 111 divided by 0.9, and we get a return here of 123.33 times. They got their money back 123.33 times. So, wow, Google just seems to be flexing nonstop. And that's a pretty big deal for the company because remember, there's a bit of a fight going on right now. Not Goggle, Google. We'll look here to the Google stock. Whoa, it's like pretty excited here. Yeah. For a multi-trillion-dollar company to double, that's a pretty big deal. It's at 3.77 trillion. Where's Microsoft? That's right. Get into the fourth spot. You're not number 3 anymore. You're not even on the top 3 board. Micro stink. This stock can't go up. And this is the partner to OpenAI. I saw a pretty lethargic Sam Altman going on to CNBC today to do an interview as they had their OpenAI deal. So this donk looks like it might be maxed out. Down, dead cat bounce down. Is it going to roll over? Is Google stealing its thunder? Does Google deserve the thunder? Well, it doesn't really matter. The stock is going up. So if you bought it, you made money. If you bought Microsoft, you didn't make money. This guy looked pretty smart right now. And I just did a quick little research note here. When did Sundar take over there at Google? CEO of Google, Chief Executive Officer, right? What a stud. 2015. He's been there for 21 years and 9 months. Whoa. This looks like one of their moonshots. I think he might have been the one to make the investment too. He's pictured right there. Whoa. Oh my goodness. That's right. Oops, that's for a little bit later. Let's go back to here. So Tom Lee says, hey, we're about to go really mega big up. And he's got pretty cool hair today. Look at that. The cooler the hair, the higher we go. Thanks, Tom. We got some granny shots too, right? Yeah, GRNY. Thank you. 7,700 by the end of the year. And a little bit later, I'm going to show you the reason why he might be right. All right, let's see if we can see Sammy Boy. Did Sam have his little picture up today? Yeah, he did. Let's go here and see what it was. And it was a little bit more curious watching him do an interview because, honestly, it looked a little bit lethargic. Looked a little bit tired. Code Red. Yeah, it looks like it's Code Red over at that company right now. Come on, where are you here, Sammy Boy? Is he in here? Do we see a picture of him? Yeah, we do. That does not look like a guy who inspires enthusiasm right now. Yes, we're working on the numbers. The AI erotica is not quite here yet. I promise it's coming. I'm working on it diligently. You might be able to lick it. Cool, Sam. You don't got cool hair like Tom Lee, so maybe it's time not to go mega up. Let's go back to our story. So 7,700 is a pretty big number. Yes, it is. There's a battle of the bots right now. Google and OpenAI going head to head. And as I told you, investors are usually ahead of the curve. Right now, they're saying sell OpenAI and buy Google. Well, didn't that kind of happen over here to Oracle too? Yeah, look at that big sell-off today. Oh, my goodness. Here we were before the big pump. Oh, my God, we're going to work with OpenAI. Why did we say we're going to work with OpenAI? This should have been a launch pad right here. OpenAI, oh, my goodness. We should have gone mega up. And I'm making some jokes because that's how you remember a little bit better. Yes, it's a little bit silly, but why is the stock doing this? And it deleted like $100 billion overnight. That is very, very, very curious because when we look over here to a sector that you might know that I like a little bit, the critical mineral sector, well, the biggest dog is only worth $10 billion. This is Apple's partner. They're partnered with the government with a contract, not an IOU like Oracle. So could you please take a second and smash a thumbs up or subscribe to the channel? Let's see if I can get the bot to work there. There we go. Or subscribe to the channel because what's really curious here is just the market cap decline on Oracle is $100 billion in one day. That's a lot of wealth destruction. If this company went up by another 10x from here, or it became a $600 stock right now, then it's worth $100 billion. And it's created the same value that Oracle offset in one single day. This little move lower right here, oh my goodness. Okay, it closed down by 11%. It's okay, sorry. Now it was only worth a $56 billion decline because at the close it rallied more, but at the low of the day it wasn't. If we go back here to MP, well, look, 12%. Whoa, what's this stock? This is USAR, worth about $3 billion. So it's a lot easier to double when you're worth $3 billion than when you're worth hundreds of billions. And some stocks have done it like I showed you. Look at the sector, though. MP, let's go. If it can maintain 60 and get back above there, that's good. Critical materials, critical metals, sorry. Lots of room to go back up to the high here. And the reason why this matters is because AI is moving to infrastructure. As you might have noticed, the Magnificent Seven are not quite so magnificent lately. There's a competition from NVIDIA at Rivian where they're saying that actually we're not going to use your chips no more, Jensen. So like the longer people have to wait and the more costly they become, the lower your advantage gets. So AI trade moves in the infrastructure era after 3 years of ChatGPT release. What's infrastructure? That's called stuff. You got to build stuff to build the robots. The robots go build the models. You interact with the models. So right now, Gemini 3.0 is the benchmark. And very curiously, what Sam said today was that, oh, well, we beat Gemini, we beat the benchmarks. Well, the benchmarks don't matter. What I care about as an end user is what gives me productivity gains. Is it stupid? Does it hallucinate? Does it drift? Is it a yes man? If you don't know what that means, you're not getting value from chatbots yet. And that's good because you will when you figure it out or they make it easier to use. Most advanced model yet. Cool. Improved movements in coding, spreadsheets, document analysis. Maybe that's why Sam's tired. He's like, I'd much rather be working on that erotica stuff. Sorry, Sammy boy, you got to make some money. And I'm guessing they're going to start soon. They got to pay the bills. And that's the issue with Oracle. Not to get myself sidetracked here, but Oracle signed huge commitments. I think it was $500 billion for Project Stargate. So why is the stock down? They beat on earnings. Well, because people are wondering, well, what if you buy all these chips and you give them OpenAI, then OpenAI doesn't pay you back? Well, that's called the inverse infinite money glitch. It inversely deletes all of your money. Because if you become insolvent because of one of your customers, that's bad. If you're Google, you're like, well, we're the customer. We're not going to screw ourselves over. We're just going to make a better product. We're going to plug it into all of our different Google stuff. And I'm using Google more. Google AI overview. Hey, it's not terrible at some stuff. Really? It's not terrible? It's not terrible. I use it. You know what a Googling is, right? Hey, just Google it. It shows up at the top. Oh. Disney will make a $1 billion investment into OpenAI to get access to Sora. Cool. Is Sora even going to make money? I don't know. All right, moving on. OpenAI unveils ChatGPT 2. Cool. Well, pitter patter. It's time to make some money here. All right, here's some money-making opportunities at the 8-minute mark of the show. Lululemon. They had earnings today. And we mentioned this stock before. I'm a little bit bittersweet here because I wanted to buy it at the last day of the month, and it didn't give me a chance. I was looking at it earlier in the week, and it's not even that high yet. It's still deeply oversold here, but it's up 10%. That's not bad in one day. That's pretty good. I think that's pretty good. Yeah, 10%. All right. So 10% in one day. Hey, these critical mineral stocks will move a lot faster, but this is a big dog. $23 billion. That's a $2.3 billion move in after hours. You log into your broker account. If you were the only shareholder in this company, man, your account went mega up today. You're like, oh, I'm really happy about that. USAR, hey, that's not bad. AREC, right? We got LAR. What else here? We got Bravo, 17% on that one. Huge. TMQ, another partner of the government. That's up 7%. 7% for TMC. Freeport McMoran, up 3.5%. That's a big dog. $69 billion company. Rio Tinto. All right, buddy, come on. You got to pick up with the pack here. $128 billion. Oh, that's a big dog. Trox, we know that one there, up roughly 5%. It's approaching $1 billion company, so it's still fairly small. WWR, that's domestic graphite. Whoa, what happened to the chart here? Yeah, exactly. Inverse money glitch. This is domestic graphite. So right now it's worth 123 million. They've probably printed a ton of shares, if I was to guess. I probably printed a ton of shares. But just that one move, just in the one day, is equal to more than all these companies. So if we're truly going into the next phase, which is the infrastructure, that's great. But in the meantime, hey, women still like looking good. That's why Lululemon's snapping back, at least today. The CEO, he's so fired. Constellation Brands, there's another idea, one that I like and that I will purchase at the end of the month. It's already started to advance. You can see it's higher by roughly $12 from our alert price. And then FactSet. I like this one. I've mentioned it before. So there you go. There's 6 high quality ideas. One's already working, one's underway. They're all above their alert price. Betting against China is positive. That's YXI, Lulu, Constellation Brands, FactSet, Trox, or TGT. Okay. When do we action those? On the last day of the month. These ones we action on the last day of the week, which is tomorrow. So there's METC or Met Coal. This one's negative. So again, we don't buy it if it's below the alert price. I'm not overly enthusiastic about these ones, to be honest. I've been front running these ones. So I bought some FactSet, bought some Trox. I wish I would have bought some Lulu, right? I was like, I'm thinking of buying Under Armour, going to add some Lulu. And I did nothing instead, like I usually do. I did nothing. All right. So now we're at roughly the 11-minute mark. Let me show you the reason why all this matters. You're like, well, Tom Lee's always bullish. Yeah. I'm sure some people are going to talk about it today. Unbelievable. Can't believe what Tom Lee said. Who gives a fuck what Tom Lee said? How can we make money? That's what I care about. Here's what's important to remember. We can only go to 7,700 if we go to 7,000 first. And we're not there yet. They use SPX for their target, so we're at 6,900. What they're basically implying is that we're going to go mega up more next year. 7,700. So to get to 7,700, we have to, first of all, pure 7,000, which means we got to go to new all-time highs. I'm going to show you why reading charts is simple. Let's go back in time here. This is 2018 to 2020. You weren't trading it? No problem. Look at the candles. Can you understand the story? If you can't, you're probably not making money. And it's no surprise. People sell at the bottom and they sell at the bottom. They liquidate. So if you're in a higher high, bullish. If you fall back below, that's a fail. Bulls made progress, failed to hold it. All right. Well, that kind of sounds like AVGO. Yeah. So, right? Oh my God, we're the smartest people ever. It's going to go up. What happened? It's gone. Yep. It's gone. And it's gone. The stock market does not apologize. Sometimes I'm a mean guy. I'm a Richard, but the stock market's a dick sometimes. You don't respect the rules. You don't understand what's happening. You're going to get wiped out. It's hard to time the market exactly at the top and exactly at the bottom, but somehow if you draw a couple of lines, you can do it. If we're above the previous all-time high, let's call that 6,900. Well, if we're at, say, 7,000 and then 7,100, we're above the previous high. That's bullish. It's called blue sky territories. All right, fall back below. That's a double top. Oh, so on that candle right there, that's the warning. That's the warning right there. Close below. That's a warning. Dead cat bounce, roll over. Well, you're like, oh my God, I should have, would have cut up here. All right, that's the first time. All right, didn't work the next time, did it? Yes. Really? Yes. Artificial intelligence is already in the stock market. You think it's not? That's called high frequency trading or algorithmic trading. By the way, go to the algo.com if you want to find out about the best algo, the Algo, and come trade with me. It's open until the end of the month. There's our previous all-time high. As long as we're above it, hey, it works out great sometimes, right? Remember, bullish until it's not derp. Okay, we can buy the breakout or it can be a trap. So you can buy the breakout here, but if you're not mindful of what's happening, it goes lower than your entry price. Okay, can we do anything different? Yeah, if you want a magnificent entry, magnifique, what do? Wait for the back test. That's the back test here. Get the back test. That's a rejection, by the way. Then we get the back test right here. Look what I'm pointing to. That candle right there. Gap up, fill the gap, right on the previous all-time high, right at the top of the box. Oh my goodness. That's right. Oh my goodness. If we look here too, that's 2 out of 4 bull because we're getting 1 candle close above the previous high and then 2. Wow. So even when it feels weird to buy the all-time high, if it's done properly, it can yield you very good rewards. There's a little win in there too. Like I told you at the onset, wins. I like to win too. Cool. Join the money gang. It goes up, it goes down. But if you're mindful of what's happening here, look what happened last time. New all-time highs, March, until what? Oh, all-time high, bounce to a lower high, bounce to a double top. That forms a head and shoulders. The previous all-time high was claimed, but then we were unable to claim it before. That creates a neckline or a resistance. So high, low, higher high, lower low. It blows it out. Lower low, lower high, lower low, fail. lower low, lower low, lower low. Then the chart fails. Oh, I usually get trapped in there. Yeah, because you don't know how to read a chart. And again, I'm not better than everyone else. This is just how it works. I'm sorry. I'll get to that in a moment here if you give me a chance. You also get a chance to get back in sometimes. So it's the same thing here. Look, you had a chance to get in right at the very beginning. Okay. Then you had a chance to get on the back test. The reason why a recapture is better, it's de-risked. Here's what it does for us. It creates a recent low, a local low, or a higher low. Low, higher low. Low, higher low, higher low, higher low. High, higher, high, higher, high, higher, high. Oh, that forms a staircase of support? Yeah. It forms a staircase of support. We also have a pivot or our previous top. So again, 7,700 is a lot above 7,000. So if we make it to say 7,000, as I showed in the previous examples here, we can go to 71, 72, we can go to 77, we can go to 1,000,000. As long as we keep going up, we can keep going up more. Cool. So they just plunge it. They just plunge it when we get the new all-time highs. High, higher low, higher high, higher low, higher high, higher low, higher high, higher low. Oh, lower low, lower high, double top. Yeah, that's it. That's pretty much it. Are we above or below the previous high? Is there resistance or blue skies? If there's blue skies, oh boy, I like blue skies. There's a blue sky very shortly right there. You can see it poked over, but then it failed. Fail breakout, lower low, close below the low. Oh my God, it's over. Or you buy the back test. Look, you got to do it again here. Buy the breakout. Okay. Or you can buy the back test. Oh, okay. You get more than one chance to usually get in. So now we're marching. Yeah, we're marching. Is it going to hold though? I don't know. AVGO was up and now it's not. The S&P 500 into after hours was at new all-time highs and now it's not. So ES went to new all-time highs. Yes, it did. Again, excluding the rollover, which now we're going to gap up to new all-time highs when the rollover happens. Anyways, back to the story. On SPY during the cash market, which is what we see on SPY, it removes all the noise, the low liquidity events. That's why we like looking at daily candle closes that are closed. The data's done. It's fixed. It's static. It's not dynamic or changing anymore. It's not variable. Here's what I don't know. I told you what I see on the one-day chart. I'll give you the notes in a moment. But I don't know what's going to happen here. This is a quarterly chart. It closes on the last day of the month. I have no idea. I do research. I look at patterns because history does repeat itself everywhere. So that's one scenario. That's a bearish scenario, by the way. This is a bearish scenario. So all those things I pointed to before, those are called failed breakouts. I don't like failed breakouts. Oh boy, I don't like that. I want to recapture the previous high. No, I don't like that at all. So that can lead to this. Sorry, that can lead to this right here. That's the bullish scenario. That's the bearish scenario. 400. 400? Yeah. Lower low. We got to go below the previous all-time high. We got to go below support if the pattern's going to repeat. It's a third cut. 1, 2, 3. Has to be at least as low as this one here. Has to be at least to the 50 MA. Has to be at least below the previous all-time high. That's scary for me. From where we are right now, oh boy, that scares me. From 623 to 689, I'm getting increasingly scared. But I understand how charts work. I know blue skies are bullish. I don't fight the trend. I'm just mindful of what can happen if I'm wrong. I make a plan. If we move forward here, let's go to the next chart. Here's a 1 month right now. I'm telling you, all right, again, let's go back to the beginning of the month because that's when I shot this. It's now December 11th. Caution, lower low, but it failed to hold it. Well, it's green, all-time high close. Again, warning, not confirmation. Same thing that happened with Dog with Us. Now we think about this. We had a record close. How is that bearish? It's not. The bulls have the edge. We were only 1 out of 4 on a candle close, but now we're 1 out of 4 bull or 2 out of 4 bull, depending on where we are. We made a higher high. The bulls made progress. They got points on the board. Now it's a matter of where we closed. We closed at the high. It implies continuation. The question is, does it hold? 650 is a lot lower than where we are now, so I'm going to say it's still totally fine if we go all the way back down to 650 or print that higher low. That's what you don't maybe appreciate. I see resistance at 700. I see resistance right here. I see support a lot lower than where we are now. There are shelves of support before we get there. We got this pivot. It's the 50 MA. It's the previous top. But if you understand the story now, let's make it even simpler. I have this article here. You can go to it. It's just at the help.thealgo.com. But in lesson 2 of how a stock market cycle works, I explain from my point of view how the scoreboard principle technical truth over opinions. You might not love my presentation every day, but I'm usually correct in that I am not looking for an answer. I'm looking to read the scoreboard. So when the Bears are winning, I say, great job, Bears. When the Bulls are winning, I say, great job, Bulls. That's all I do. Look at my icons. It's all I do. Great job, Green Man. Look at that Green Man dance. Look at that bull right there. Couple of emojis, couple of lines of text. I know what it means for me. A closed candle is like a game's final score. It tells you what happened, not what you wish would have happened. Oh, the referee sucked this game. He should have given points to the Bears. That wasn't a strikeout. Anyways, that's the whole point. That's why we look at closed candles. When the scoreboard shows 142 to 131, the debate is over. The market candle close is the same way. It's final. It's factual. And your next move should respect that. So there's trends, there's structure, there's volume, there's momentum, there's range. When you read charts as data, not drama, you see probability instead of noise. Truth is price. Opinion is a distraction. Oh, that's it? Yes. And then go make a plan, which is on the second link in the description, 100% free. Go do this. Do it right now if you haven't already. Oh, maybe others need a plan. I don't. Oh, you probably need a plan. I need a plan on everything I buy, every single idea, even if it works. This one here didn't work. I'll show you what happened. Oh, but aren't YouTubers only ever successful? They only have home runs? Well, most of the time, that's all they show you. Doesn't mean that's all they have. I got stung with a little bit of insurance. Oh my God, insurance. What's that? A contract in which an individual or entity pays for insurance company in exchange for financial protection or reimbursement of losses resulting from a covered event. Take my money, please. 0.5%, no problem. The doggies didn't pay out this time. That's okay. The doggies paid out before. That's been an excellent idea for me. I could have chosen a different one. That's the insurance I chose. That's the policy I chose, which means I knew my defined risk. It was only 0.5% of my account. I've reset it again. And you can see here, I went positive during the first half of the week, and then I gave it back. Oh, it was only a whisper, which means we only got half a size, 0.5% risk. This part is confusing for you. I would really encourage you to pay attention because this is literally what I'm doing. It was the insurance. I knew I might lose, and now I lost. I'm not crying about it. I'm showing you exactly why. Here's the reasons why. Now that the insurance is paid for and we're going into new all-time highs, we'll see if that happens. If we don't, I'm probably going to have to buy more insurance. I'm going to have to wait for the next alert. Otherwise, I scale back in long, being mindful of what can happen here. Even with my account reset, I never get scared there's going to be new opportunities. Here's the reasons why. If I look here, I'm looking at 3 columns, the stop, the trim, the target. This is going to sum the value from each individual row or each individual idea. I'll show you that right now. I'll go to my account. Let's go to Justin. If we go here, I can hover over and see that XPEV from right now, I'm down by 0.2 on the account. The P&L on the individual trade, which means from my average to the current price, I'm down by 4%. So a 4% loss on a 5.3% weight gives me a loss on account of 0.2. My stop relative to that will be a loss on account of an additional 0.8%. My trim will yield me 0.14, or my target will give me 0.6. That's how we calculate the risk reward. If we look right here, negative 0.6, negative 1.0, negative 0.5. If there's only a whisper dot, it's only half ready. We only put on half the position, which means our risk is only 0.5. Our stop doesn't change though, which means the weight is proportionate to the percent decline to go from the average price down to the stop loss. If your brain is sweating right now, you don't know how to manage risk. You're out in the world unprotected. Does the mortgage company allow you to buy a house without insurance? No, because you don't own all of it. It's the same thing if you're hiring a portfolio manager. They're buying insurance. You just don't know it. Oh, they are? Yeah. And if you manage everything yourself and you're like, oh, well, I just got my inheritance. I don't need to talk to no stupid bank or to get no stupid insurance. Wait till your house burns down. You're going to be like, oh, that insurance thing sounds like pretty smart right now. I wish I would have had that. The premium's what? Like 0.5 to 1% of my account? Usually that's your premium. Oh, so now the reward would be that, okay, I stopped out of that. Now my risk on account summed up between all those values I just showed you, I could lose 2.3% more of my account if all 4 of these trades stop out at their current weight. However, my reward is now going to be 1.1 on the trim, or half of my gain to the stop. And then my target's another 4.3, which means I could lose up to 2.3, or I can make up to 5.4. And my risk reward on these ideas is a blended 3.9. It's just summing the average and then dividing by 4. So what this basically means is that we trim proportionate on our stop, on our trim always 1-for-1. If that's the case, then we take our our plus 3, we take our 1-for-1 trim and we add, here it's a blended 3.9. So 1 plus 4 divided by 2. Well, that's how we get our blended risk reward, which means total, I could either make I could lose up to 2.3, or I can make up to 5.4. My blended risk reward is 2.35 because I'm selling half at break even, proportionate to my loss. So right as of right now, I'm only 16% invested. I've got 3 half trades, 1 full trade, and that's only with 16% invested. My max defined loss. Everyone wants to know how to manage risk. This is exactly how. You need to know your predefined stop and then measure against that. If you're wondering how we do it, I'll show you. You can go here to stock chart and you can see how the screener identifies the idea. Here's XPEV. Okay. Then we go here to the levels chart, which generates the idea. Here's the order we're looking at. So now we can see here what the order actually is. We can see where we're stopping, where we're trimming, and where our target is. If we go to another one here, let's go to say, I don't know, like Bumble. Let's look at this one. Stock chart. Oh, that's like a pretty nice setup. I think it is. I think that's a pretty nice curl. I like that. I can see us going back up to here. This is without the screener. This is what my eyes look at when I'm screening. I can't look at 2,000 different alerts all day, though. That's what our system does. Looks at thousands of unique screeners all day. I like that. I like that little curl. Can we get an idea from it? Well, again, I spent millions of dollars to program this. This is for me. This is the idea. I just say yes or no because I trade one way. It's the same way every time. That's it. That's it. If I'm wrong, I stop out right here. If I'm right, I trim here 1-for-1, and then I sell up here. The stop is always the same. So if now I go to here, again, I can do this really quickly because normally it's all in the system now. I don't have to do it. If I go here, say for Bumble, if I go from an average of 3.62, let's go to the stop. So we get 2.97 divided by 3.62, which means the percent decline -1. The percent decline would be 18%. Well, if I don't want to risk more than 0.5% on my account, I have to measure that for my size. That's why it's only 2.8%, because 2.8 times 0.18 would equal 0.55. Let me test the math right now. 0.028. And then I have a gain on the account too. So there's an open unrealized gain. So that's probably the reason why. If I go to one which is exactly flat, let's look here to Duolingo. Let's try to see if we can do that one. 154.99 divided by 199.75 equals -1. That's our percent loss times our weight here of 0.044. There we go. It's 9.85. So again, it's pretty close to 1%. It's very close. If that rounded to 1, that would be exactly 1% risk on account. So now we can see that we're risking 1.01 from the current position because it's slightly green. So we have a slight amount of unrealized profit. We're going to give back right now 1.01%. This is what I need to make orders. This is everything I need. But like on here, this is how I make all my money. And I do pretty good. So I showed you the one that didn't work. I'm showing, and then I can check that one off. It's now stopped out, right? Exit on a stop. We can see it right here on the platform too. I'm not going to show you anyways. FDS, Bumble, and Duolingo. We're going to buy more of these on Friday if they close above the alert. All right, that's it. That's pretty much it. So again, the orders come through like this. I talked about these earlier in the show. Lulu, FactSets, Constellation Brands, Tronox, Target, Met Coal, Laser, Coursera, Algo. Sorry, that's Roblox, Celsius Holdings, or Bitcoin. Great. We got what? 8 great ideas. We choose the ones we like. We make a plan for it, which for me means going and clicking on buy. And then that's it. Understand where we're at in the cycle for the broader market, for my individual chart. Understand what I'm doing. Buy insurance when I need it. I'm okay to do that. And if all this interests you, you're still watching. It's been 29 minutes. I was aiming for this to be a short video, but anyways, let's get on with the show. You might need an accountability partner. That's why some days I don't know how long the videos will be, because I use YouTube as my accountability partner because I want to be at the top of the mountain. And I don't push myself unless someone is there to hold me accountable. An accountability partner should feel safe to challenge you when you are not keeping your commitments. Oh, that sounds nice. Sunshine and rainbows and lollipops and unicorns, right? Achieve more with an accountability partner. Ah, well, I'm a man. I don't need that. Well, it's a lot more fun to celebrate at the top of the mountain if you can give someone a high five instead of giving yourself a high five. So remember, read this again. I don't even know who this guy is. I just Googled accountability partner. Again, Googled it. An accountability partner should feel safe to challenge you when you're not keeping your commitments. You want to know how the market does that for me? Every day I have to make a YouTube video. I have to have an opinion. I'm not talking about the scoreboard. I'm talking about Justin has to tell you what he thinks. This guy right here has been showing up for a long time. Since on this channel, since 2021. On my first one, 2018. Millions of views. I show up every day. I have to tell you what I think. Here's how I'm interpreting the data. Sell, big move, holy F. Isn't that what happened? 8 in a row. Trump got what he wants. It sold off into Powell. There was a big move potential. Then it went up. Holy F. Yeah, that's what's happened. That's what I have to tell you every day. That's what works for me. This is my accountability partner. Oh, well, what did you said you would have bought this thing 5 weeks ago, but did you? Well, you can see it right here. You can see everything I did, every single video. There's over 1,000 videos on this channel, I think. 1,500 videos on just this channel and a live stream every day. I've been making lots of videos. This is my accountability partner. Okay, but can he tell you when you're not doing things so great? Well, that's where I need this thing here. I need my spreadsheet. Because if I'm wrong, like I do a stupid trade like this one here on space, negative 23%. Well, it's not, oh, Justin, it's okay. Let me pet your hair and tell you you're smart. I'm not going to challenge you. No. That's what the market does. That's what Mr. Market does. He's Mike Tyson. I want to beat the best. I want to beat the market. I want to beat S&P 500. I got to be able to get into the ring with Mike Tyson and hold my own. I don't have to win. I have to be precise on the moves I choose to take. An accountability partner should feel safe to challenge you when you're not keeping your commitments. Hey, you said you were going to sell if you have a loss on the portfolio of more than 1%. I do that in my Algo account, but are you going to do that in this account? It's why I didn't buy Lulu, to be honest. Hey, I'm telling you the truth. It's right here on my watch list. I got it right there as an idea. It's my second top value pick. I purchased Mosaic and purchased more FactSet this week instead. I made a choice. I didn't know they had earnings. I probably should have checked that. But anyways, shoulda, woulda, coulda. I was looking here and I was trying to be accountable to myself. That's my open loss. I have another unrealized loss there too. It hurts my feelings. I was going to buy more of this one or buy some Lulu. I didn't know what to do. I don't want to risk more. So I'm like, well, I don't really want to risk more. I'm already down. And that's what hurt me. It's one of my only losers on my whole sheet. So what did I do? I didn't buy more. And that's totally fine. Here's the reasons why. I'm up by 21.5% on the year. And I have no problem showing the receipts. I can show you every trade I've made. I can show you exactly every closed position, every exact dollar that I've made. Why? Because I'm doing this for reals. I'm doing this for keeps. And what that means is that I need to be accountable. When I made this website update, I put my stats right here. You can see them. Where's my stats? S&P was up by 12.7. My Algo portfolio, which I just reset, was up by 18. This one was up 18.6%. Well, now, again, I've had some really good hits lately. Mo's straight out of the gate, 0.2 to the account. Get in there, buddy. So what that means is I'm now at 21.5%. But I've been a wussy. I'm mostly in cash. My account's not performing really well right now. If we look at SPY in a 12-month, it's up by 17.5. S&P has outperformed me. It went from 12.7 to 17.5. It's catching up to me. This account only went up an additional 3%. This account, I don't know. I reset it. So that's the point. Know the rules of the market, understand how to trade, and you will likely do really well. These are my accountability partners. These are free tools that I've given to you. If you go to that same help.thealgo.com, there is a free download of my spreadsheet I use right here every day with a video and instructions. I would encourage you to get familiar with it, whether or not you want to come trade with me, which is only available until the end of the month. That's the pitch. You don't want it? I will keep giving you free good content every day because I am being greedy when I am being generous. You might not realize it, but the YouTube audience and the platform and my public spreadsheet, which is available to everyone in my plan to grow from in my 20s to my 30s into later. I've been trading for 20 years. I need to be able to do exactly this. I'm buying Mosaic. I'm buying it at $23.69. I'm buying it for 2% of my portfolio. There's my target. There's my stop. My notes are in my thread. Here's my idea. I'll give it to you. Mosaic, swing whisper. Oh, the algo generated the idea, and it told you if you're right, you can make 6, and if you're wrong, you could lose 1. That's what it told me. On this 1 week chart, I like the zone. I put it right here. I like the zone on the 1 week. This is a 1 week alert. Great. On the 1 month, if in doubt, zoom out. Nice inverse head and shoulders. Catch up versus its peers. NTR and CF. That doesn't make sense to you? You don't need to understand the reasons why I like it. This makes sense to me. Department of Interior, why do you care about that? US DOI, 1849. Whoa, that's old. Yeah, it is. But now there's new critical minerals. Silver, might have heard about that one lately. Uranium, might have heard about that one. Silicon, maybe you'll hear more about that one. Well, there's phosphate and potash. Mosaic company engages in the production and market of concentration of potash and phosphate. They operate through these verticals, phosphates and potash. The US government saying phosphate and potash are now essential critical minerals. I think they're part of Bright Loop, which I'm not going to get into right now, but if we go here to Moz, are they an American company? Yes. They got bought out a while ago. This is from my hometown, Mosaic Stadium. What's that? Well, it's where the Rough Riders work. That's where the Rough Riders go to work. They won the Grey Cup this year. You don't even know what that means, do you? Probably not. The company is founded and headquartered in Florida. Wait, where does a president live? Florida? It's an American company with critical minerals. Yeah, that's the story. What could happen in the next weeks to months to maybe a year? I think this. The phosphorus cycle. What the F is this? Well, presto magic, you've got your carbon capture. Nitrogen. That's your CO2. That makes food. Food is yummy. Does more than just food, though. This is called science. That's how I make money. I look at the chart. I see a money-making opportunity. I go in and buy. If you want to find out more, go to thealgo.com. I'll see you on the next show.